Hello, good morning, ladies and gentlemen. Trust you're having a wonderful moment out there, and hope you are getting ready for the New York session today. So let's kickstart the session. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get this started. I would like to see some feedback, please. If you can see my screen, you can hear my voice clearly, please type in hi in the comment section. Okay, let's see what we have here. All right, I see Dino. Good morning. Thank you. Vivi, how are you doing this morning? Good morning to you. L1182, good morning. Thank you. 637, thank you. Valerique, how are you doing this morning? Good morning to you too. 9166, I see you. Vivi, good morning. Hey Carrie, good morning to you. Thank you very much. And I want to assume that we are good to go this morning. On this note, I'm so very pleased to welcome you all to yet another promising session on the XAUUSD. My name is Sheriffdaramola, and for the next 1 hour I'll be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you are highly welcome on board. I'm so always joyful to see newcomers in the house. And what we simply do here, if you don't know, is that we come together to review financial instrument, which of course we have chosen at the beginning of the week. And this instrument is what is on our watch list and what we have been monitoring since the beginning of the week. So we come here to see how we can manage our existing open position and at the same time look out for trading opportunities that we can take advantage of during the New York sessions. So this is simply what we do here on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And it might look a little bit overwhelming at first since this is your first time being with us, but I assure you that with time, you will get to understand how this works and you will be able to use the information you have gathered here to make your own individual decision when the time is right. So once again, I welcome you all, and on this note, we shall be diving right into the business for today. And as you all know how we do it here, the first thing we want to be doing this morning is to look at the economic calendar. Obviously, we want to keep tabs with the fundamentals, as this helps us to be able to see what majority in the market are looking forward to. And at the same time, it helps us to be able to position ourselves in such a way that we can catch any potential opportunity when the time is right. So with that being said, here let's dive right into the economic calendar. And here we are on the economic calendar, and normally what we normally focus on are high impact events that are going to be affecting any of the currencies that we are monitoring, and these are the pound sterling, the Japanese yen, and the US dollar. But from the look of things, we do not have any high impact event that will be affecting any of these pairs for today. And as a result of this, I had to readjust my filter so that I can include the medium impact event, which is something that will also be on the table for majority in the market to look forward to in order to make a decision for today. And when I did that, I was able to pull out a couple of events that we can also include into our timing whenever we want to make a decision today. And one of these events came up at least an hour ago, and that is the Bank of England's broadband speech. Broadbent is a member of the Monetary Policy Committee of the Bank of England. He has done the speech an hour ago, but I'm yet to get an highlight of what the speech was all about. I think I will be doing that in after the live session. And then we also have the housing pricing index, which is coming up in about 2 hours from now, 2 or 3 hours from now. And the housing pricing index is released by the Federal Housing Finance Agency, and it provides an estimate value of the housing market condition. It is an important indicator as the housing market is considered as a sensitive factor to the US economy. So this is one event too we are going to be looking forward to, and from the previous data we have here, we have a 0.2%, and economists are projecting a minus 0.2, which is not a good sign for the US dollar there. So we are going to be looking forward to see what the actual data will be. Will it be just as expected, below expectation, or beyond expectation? Then we also have the S&P publication for the Case-Shiller home price indices, and this examines the change in the value of the residential real estate market in 20 regions across the US. So this is also another impactful event that has something to do with the housing sector. Then we have the consumer confidence coming in 5 hours from now, and this is a first-tier US figure scheduled throughout the week. And this consumer confidence is released by the Conference Board, and it captures the level of confidence that individuals have in economic activity. A high level of consumer confidence stimulates economic expansion, while a low level drives to economic downturn. And though we don't have any previous data in, but I hope that with time this will be released, and then we can anticipate something tangible ahead of that event. Then finally we have the new home sales, which is released by the US Census Bureau and is an important measure of housing market conditions. So today is blessed with a lot of indicator from the housing sector, which will also be another indication of what the health of the US economy is. So these are going to be affecting the instrument that comprises the US dollar. So at this point, and with this information we have gathered here, let's dive right into the chart, and we shall be considering these events too while we take a technical dissection of the current market structure. And as usual, the first commodity we are going to be looking at this morning is the US oil, and let's look at how the week has started for us on the US oil. At this particular point in time, we have actually been profitable on the US oil so far, though I'm already out of that trade, and I hope you're out of that trade. And for those who are still in this trade, we shall be looking at how we are going to be managing this open position as time goes by. So the week started on a bearish note for us on the US oil, as we were able to spot this channel where price action started at the $77.65 level, as you can see here, and price action dropped into the $77.69 area, where that level has been indicated as our supply zone, our demand zone for the week. And if you compare what happened during the early hours of this week and what happened on Friday, you will see that it has a strong memory for buying power. And what happened afterwards was quite interesting. You know what we look out for whenever we have this kind of simple setup where price action is trapped within a range. And we always want to wait for price action to either break out the channel for buying opportunity or break down the channel for selling opportunities. So with our buy stop order and sell stop order placed at both ends, so we had a buy stop order at the resistant line, and then we had a sell stop order below the structure, but the former was what happened as we saw price action trigger our buy position right above the $77.65 level to trigger our first buy position for the week. And then we also had the privilege of adding more positions to our existing trade. If you recalled yesterday, I told us all that we are going to be having a buy stop order above the $78 level, where a breakout of that structure as well will trigger the second position. And we saw what happened during the New York session yesterday, as our first position went to as far as 150 pips move before the sell pressure began. And the second position also went for about 120 pips before the bearish momentum began here. And I hope you did move your stop loss accordingly to lock in some profit so that you can protect the position you had, as I did. And I was taking out around this area with about I think about 150 thereabout at this point in time, as I was taking out after the sell pressure came in around that area. And for those who still have a sell buy position running at this point, I will be advising you to move your stop loss. You can move it around the $78.20 level, just right below that structure, or you could even leave the trade at this point, as we might be going through a retracement phase at this particular point in time. So with that being said here, and planning into the New York session today, what is going to be our next line of action? What do we want to be seeing on this chart to guide our trading activity for today? Is this a bullish momentum, or is this going to turn out to be a move that will incite a sell-off in this market? Now, with the whole situation we have here, one thing we want to first of all acknowledge is the fact that as soon as price got into that $78.85 level, we begin to see some selling pressure resume around that area. And if you recall vividly yesterday, I made mention of this current structure that we need to be very patient as soon as price action gets into that level. For the sake of clarity and for us to be able to have to understand the importance of that zone, I would like to take us a little bit higher into the 4 hours time frame so that you can see what I'm talking about here very clearly. So in that regard, we shall scale up a little bit into the 4 hours time frame, and this is what I was able to project during our live session yesterday. So we saw this on the 4 hours time frame, and obviously we can see how price action has been bullish since the second week of the month of March. And we saw how price action got into this old flat channel of a thing since the beginning of this month, before we saw the breakdown of this structure here at the $79.50 level to signal the presence of sellers in this market. And one thing we thought of yesterday was the fact that this whole situation we have here could probably be a retracement of that impulsive move that brought us into this flat channel. So for the sake of clarity, so we had this impulse leg that brought us into this channel, and as soon as that channel was broken to the downside, it was a sign that we might likely be seeing a retracement into a structure which will fall within our golden zone area. And our golden zone area is an area between the 50 and the 78.6% of our previous impulse leg. So for the sake of clarity here, let's bring out our Fibonacci retracement tool, run it through the previous impulse leg, and we shall be focusing on that area between the 50 and the 78.6% of that previous impulse leg, which will probably happen to be the TP target for sellers here if the sell momentum continues to the downside, and the same area will be serving as a potential buy zone when we start seeing a reversal pattern within this area. So for the sake of clarity, let's label this out. So potential TP target zone for sellers, okay, and then this area is going to be serving as a potential buy window when we start seeing a reversal pattern within this area. Hold on a second, let's put this right inside that box, and then let's give this a yellow color. All right, so we don't need the retracement tool anymore, and there we go. So this whole situation was what we were actually projecting during the live session yesterday. And one more thing about this whole structure here is the breakdown of that bullish trend line that has been supporting that bullish momentum since last month. So we saw the breakdown of the structure happened on Thursday. We saw a retest of structure on Friday, and I told us all yesterday that if we do have a bullish momentum, that we need to be very careful as soon as price action gets into the structure. as it depends on how price action reacts to that level that will determine if we are going to be adding more position to our existing trade, or we are going to be getting ready to join a decline to the downside. And with the look of things right now, and looking at judging from the last couple of candles in this market, it's likely price action is going through a bearish momentum, probably retesting that trend line to incite that move into the structure that we just identified here. But we can't jump into conclusion that that will be the case at this point, as we still need some level of confirmation around this area to give us that confidence that this is actually a retracement move to the downside. So if we now zoom into the current structure, now things become a little bit clearer. We begin to see a potential here. And I would also want to call our attention to the structure we identified yesterday, which is looking like the reversal pattern, which actually helped us to take advantage of that bullish move. So we saw the impulsive leg last week that brought us to this point. Then we saw how the $77 area has been a very strong niche for buying power in this market. We saw the second touch. Price was unable to find a new low. Then we had the $78 level, which happens to be our key level for this week, also serving as the neckline of that reversal pattern. Now, with the breakout of that neckline area yesterday, this actually confirmed that we have a valid reversal pattern. Now, there is a caveat to the structure at this point, as we have been seeing some selling pressure resume in the last couple of hours. Now, with price action retesting this trend line here, are we going to be seeing a situation where price will retrace back into the neckline, which is a technical expectation? Of course, after a breakout of a neckline of a reversal pattern, we expect that price will come back and do a retest of that structure to incite another wave of bullish momentum. So you can see how important the key level we have at the $78 level is at this particular point in time. So we need to be very, very patient here. We don't want to jump into a moving trend at this point. Even though we are seeing some bearish momentum gradually coming in at this point, we cannot jump into such a conclusion that we want to be selling right away, as we'll still need to see how price action will be reacting to the zone here between the $77.65 level and the $78 area. Now look at that confluence there. It also shares a confluence with the resistant line of that descending channel that we identified earlier. So we had a breakout of both the key level at the $78 mark and the resistant line of that descending channel, where we might likely see price come back to do a retest of structure. And whenever we start seeing the appearance of buy pressure around this area, where sellers are finding it difficult to break down the $77.65 level, then we would have no choice than to look out for buying opportunity to join this move to the upside, where a breakout of the $79.50 level will welcome more buying opportunity in this market. So this is how we are going to be buying the US oil for today. So it is very important we see how price action reacts to that $78 level to determine what our next line of action will be. However, if at any point in time today price action breaks down the $78 level, something like this, breaks down that structure, we are not getting too excited. We scale immediately down into our lower time frame. It could be your 5 minutes, your 10 minutes, or even your 15 minutes time frame. You want to see some confirmation that sellers are gradually gaining momentum, where we start seeing selling pressure below the structure on our lower time frame, buyers finding it difficult to climb back above the $78 level. Then at this point, we want to be in for a bearish momentum right below the $77.65 level, and we could have our TP target anywhere between the $75 level and the $70.50 area. We have quite a huge TP target zone here. So let's see how price action will play out as we head into the New York session today. So remember that the $78 level at this point is our key level for this week, and it depends on how price action reacts to the structure that will determine if we are going to be buying or selling the US oil for today. So let's keep this in mind. You might want to screenshot my screen or record my screen so that you can use it as a reference point when you're about to make your individual decision on the US oil. So let's see how things plays out here. So the key level here, our center of focus is going to be around this area. But if we start seeing buy pressure above that $78 level, price might not even get into that structure. If we start seeing something like it could be a double bottom structure or a head and shoulder pattern, any reversal pattern you can think of comes up there on our lower time frame, then we could be part of the move to the upside. So let's keep this in mind while we continue to monitor this move. So that is that on the US oil. If you have any questions whatsoever, let me know right in the comment section, and be rest assured that I am willing to be of help. Okay, Ike88, good morning to you. I'm very fine, thank you here. Trust you are doing well over there. Nstar Haiti 509 official, how are you doing today? Good morning, glad to have you around. I see you, Ike88, thank you. All right, so in the absence of no questions, I want to assume that we are good to go. So let's move on to the next option right away, and that is going to be the US option. So on the US option, what do we have here? So we really do have a choppy situation here since yesterday, in fact. And at one point we had our buy position triggered, but it didn't last long. As you can see, price action broke out of that resistant line, moved about 60 pips in our favor before the sell pressure coming again to take us out of that position. And what we simply had here, hold on a second, let's zoom this out a little bit. So the week started with a situation where we had price action initially within this channel between the 12,985 and the 12,930, and obviously we all know what we normally look out for whenever we have price action within this channel. We want to see price action either break out of the channel to the upside for buying opportunity, or breakdown of the channel to the downside for selling opportunity. And that's triggered our buy position yesterday, as you can see here, moving about 60 pips before we were taken out of that position. And that tells us a lot about this current structure, that sellers are still very, very strong in this market. And if you look at that key level we identified yesterday, remember we had a key level, had a $13,000 level, a very strong psychological area considering the round figure of that price. As you can see here, we have been witnessing the sell pressure around this area since Friday of last week's trading session, and it continued at the beginning of this week too as well. And what we saw here during the New York session is also projecting that sellers are still very, very strong in this market. Recall I told us all yesterday that if we are going to be selling this, we are not going to be having a sell stop right away, as we want to see a breakdown of that structure to happen first. Then we look for price action to come back and do a retest of this level, after which we want to be joining the bearish move to the downside. And some of us will have actually taken advantage of that move right there, as price action moved about 95 pips before we started seeing this buy pressure around that 12,900 area. And for those who are actually taking advantage of the sell position, my advice right now is to try to move your stop loss, lock in this profit, as the demand zone we are having here appears to be getting stronger by the day. And for those who had a sell position running from the 12,960 area, kindly move your stop loss anywhere right above the 12,930, giving room for price action to breathe. And let's see if this bearish momentum will continue, or it will turn out to be a reversal pattern that will begin another wave of bullish momentum. So now, going into the New York session today, what is going to be our plans from this current structure? Well, the first thing we have to do here, first of all, looking at what we have on the 1 hour time frame, is to acknowledge this demand zone that is sitting around the 12,900. as you can see, since last week we have been seeing buy pressure resume from that area as soon as sellers got into the structure, making it difficult for sellers to break through. So in that regard, we want to have this mapped out here. So we have a demand zone sitting here. So let's label this area for the sake of clarity, and then we call it a demand zone at this point, as it has given us a sign that it's so strong that sellers are finding it difficult to break through that structure. So I will give this the fonts. Okay, can you see this clearly? Okay, so if you can't, let me know in the comment section. If you can't see clearly, let me know. All right, so right now we have a demand zone at this point in time around the 12,900, and for me at this point, you would agree with me that it doesn't make any sense to be selling above a very strong demand zone like this, and we will need a confirmation that sellers have gained some momentum here before we want to be joining any bearish move. And the only thing that will make me to sell or add more sell position to the existing trade is to see a breakthrough of this demand zone where selling pressure resumes after the breakdown of that structure. Then we could join a decline to the downside. But before I go more into the details here, I think it is appropriate that we scale up into the daily time frame. Let's look at things from an holistic point of view to see if we are actually in alignment with what the psychology of the market is saying at this point. So in that regard, we shall be scaling up into the daily time frame. So let's see what is happening on this chart. And let's look at this closely. So this is what we had here. We actually identified this yesterday when we started the week, and our center of focus was simply around price activity since the beginning of this year. And what we saw on this chart since the beginning of the year was quite interesting, and it encompasses the strength of the buyers in this market. And this resulted into this ascending channel you see here on your screen after connecting the series of higher highs and the series of higher lows in this market. So the bullish momentum since the beginning of this year was very, very strong. And in fact, the breakthrough of the 12,800 further emphasized the strength of the buyers at the beginning of this year. And you can see the 12,800 was a level that has been a very strong selling niche for participants in this market, and not until the first day of this month that we saw the breakout of the 12,800, further cementing how buyers are strong at this point. However, things got a little bit more interesting after the breakout of that structure. As you can see here, that in the last 2 to 3 weeks in this market, price action has been caught within a channel right within the 13,220 and the 12,800 area, to further emphasize that there is an indecision in this market. And from a long-term perspective, when you look at this kind of structure, you know what we want to see in this market for us to give us a signal of where price action will be going. We want to see price action either break out of that resistant line to give us a signal that buyers have now gathered that strength and momentum to break through that selling niche at the 13,220 to signal a bullish momentum. And the other scenario is a breakdown of the 12,800 level could incite a bearish move from this point. So this is the dilemma we are caught within right now, and it's very important that we wait for this whole structure to evolve and mature before we actually join a move. But one thing about this whole thing here is that it will take quite a long time for price action to break out of any of the structure. Now, if we take into consideration the breakout of the 13,220, it would take a whopping 300 pips before that breakout happens. So are we going to wait for that 300 pips and miss out on that move before it finally breaks out of that structure? No, we all want to look out for trading opportunities to catch that move early enough so that we can maximize that move. And if at the end of the day a breakout of that resistant line happens, then we add more position to our existing trade. That is the right way of doing it. Then another thing that could happen here is the breakdown of the key level at the 12,800, which will be taking about 150 pips before that happen. And that also, we can't wait for 150 pips move to happen before we now want to join. But if you are a long-term trader, you can actually wait. That is, if you have a positional trader would have a position running for 2, 3, 4, 5 months, then it's okay for you to wait. But if you are a day trader and you trade on a daily basis, then you want to catch that move early enough so that you can maximize your profit. And to do that, we want to scale down to a much more lower time frame to see how price action has been reacting since the beginning of the week, and this will give us a clue into where price action could likely go. And one thing about this thing here is that if we start seeing buy pressure above that 12,800, like it has always been since the beginning of the month, then definitely we want to be looking out for buying opportunity. But if we start seeing structures that supports a trend to the downside, then we want to be part of that move even before the breakout of the 12,800 happens. So let's scale down to the 1 hour time frame where we begin to see things more clearly. So back to the 1 hour time frame here. Hold on a second. Do we have something on the 4 hours time frame? Okay, I think we do have something on the 4 hours time frame. So this is the 4 hours time frame here, and it is quite obvious that since the beginning of last month it is bullish, and we have a couple of bullish trend line here to emphasize the bullish momentum in this market. So our center of focus will be on this bullish trend line here, which has been respected since the mid-month of March. And if we zoom into the current structure, you will see that we already have a breakdown of that bullish trend line, and currently price action is trading below both of these structures. So we have price trading below our key level at a $13,000 mark, which is telling us that we should look out for more selling opportunities. And then at this point, we have a demand zone here at a 12,900. So for me, what I will do here is this: I will acknowledge a key level within that demand zone. If we have a breakthrough at any point in time today, then we will get ready to be part of a bearish move. So this level here is around the 12,890. So let's label this for the sake of clarity, and this will be our center of focus for selling opportunities when we scale down to a lower time frame. So this is the 12,890. So sitting right inside that demand zone. Let's put it at the back. So here we go. So now to sell this right now, we are going to be looking out for breakdown retest of the 12,890 to be part of that bearish move to the downside. And if a breakdown of the 12,800 happens, remember that 12,800 we identified on the daily time frame, a breakdown of that structure too will now welcome more selling opportunities in this market. So this is how we are going to be looking out for selling opportunities today. So let's go back into the 1 hour time frame and let's see things at this point more clearly. So we have sell breakdown retest here, and we have the buy breakout retest at that point. Hold on a second, let's delete this one. So this is what we are going to be looking forward to today. It's now a simple setup, very easy for us to identify what could happen today. So we have the 12,890, looking for the breakdown of that structure for selling opportunity, as if a breakdown of the 12,890 happened today, then we will have seen a situation where the buy positions here have been taken out. Now, in as much as we're looking out for selling opportunities below the 12,890, and if the contrary happens and instead price action continues to find higher highs in this market, then how do we intend to take advantage of that move? Now, what I will do here is to consider this bearish momentum since last week, where price action has been finding lower highs in this market. When we bring out our line chart and connect the series of lower highs in this market, hold on a second, we will see it clear now. Okay, then we'll do some readjustment when we bring back our candle chart to cover most of this trend line. So here we have. So I will give this a red color to give this bearish expectation here. So this trend line has been respected It has been supporting a bearish move since last week. Now, if price action continues to trade below that trend line, then we look out for more selling opportunities, leading to the breakdown of the 12,890. Now, to buy this whole situation here, we want to see price action take out that trend line first of all, and you will see that taking out that trend line would also shares a beautiful confluence with that our key level had a $13,000 mark. Now, at this point, if price action breaks out of that trend line, then we want to be looking out for buying pressure. So immediately a breakout of the trend line happens, we scale down to our lower time frame to look out for buying pressure around the structure or around the $13,000 mark to be part of the trend continuation to the upside. So this is how we are going to be buying the US tech for today. So we are looking out for buying opportunity above or the breakout of that trend line for us to be part of any bullish move to the upside. But things are looking very bearish at this point, so let's see how price action plays out. So we have two structures that will guide our trading activity for today. We have the 12,890, then we have the $13,000 area for buying opportunities. So these are my views here on the US tech. If you have any questions whatsoever, feel free to drop your inquiries in the comment section. I can see Moskel Hayes. Good morning to you. Ike8A says thank you for your time. Okay, wish you all the you're welcome. I appreciate that. I take that as a compliment. I wish you the best too as well. SML, how are you doing today? Good morning to you too. So on this note, let's move on to the next pair. Sorry, before we move on to the next pair, something just caught my attention here on the US tech, and for the fact that price is within a very strong demand zone, which has been consistent in the last 3-4 days now, why not start thinking of buying around this area? And what do we want to be seeing on this chart that will make us to buy around this structure? And I think things will get a little bit clearer if we scale down to a much more lower time frame, let's say the 15 minutes time frame for instance. And if we scale down to the 15 minutes time frame, what do you think we see here? The first thing I will do here is to acknowledge this bearish move, which started yesterday night. And if we do that appropriately, we have a trend line, and then remember that we have this support line at the 12,930, which has been a strong buying niche at the beginning of the week. And one thing I will see here is why not join at the breakout of this trend line, which also shares a confluence with that trend line that we have here. So what we are going to be looking out for right here on the 15 minutes time frame is a breakout retest of the 12,930. It could even come to as far as doing a retest of this trend line, but most importantly, we want to see a reversal pattern. And immediately you identify a reversal pattern, we have a neckline of the reversal pattern, breakout of the neckline area, then we can join that move all the way to the upside. And then if a breakout of the $13,000 mark happens, we already have a buy stop order to be able to add more position to our existing trade. So this is what we are going to be looking at on the US tech today. So we are going to be buying anywhere above the 12,930 to join this move, and this is considered because of the strong demand zone we have here around the 12,900. So let's see how this is going to be playing out as we go on into the New York session today. So let's wait for that to happen there, and we'll be part of the move all the way up. So with that being said here, let's move on to the next pair. And the next pair we are going to be looking at is the GBPUSD. And on the GBPUSD, we had a buy position yesterday. And what did we see that make us to buy the GBPUSD yesterday? So at the beginning of the week, we spotted this old structure here between the 1.24550 level, which happens to be the key level for the week, and the support line here at the 1.24100 area. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that channel for buying opportunity, or a breakdown of that channel for selling opportunity. And what we had here yesterday was to have our buy stop order above the 1.24550 level, which triggered our buy position, and we were fortunate enough to be part of this move as price action moved about 57 pips thereabout before the sell pressure began. And I hope you did move your stop loss accordingly to lock in some profit before being taken out of that position. And at least you would have taken some small profit, maybe 30-40 pips, though it's not that significant, but it's a very good way to start the week. And at this point in time, I'm very sure you will not be in any trade right now, as you would have been taken out with some small profit. But if you have a position running, it so happens that you still have a position running at this point, I will be advising that you move your stop loss to anywhere above the 1.24550 level, which happens to be our key level for this week. Now, with that being said here, what is going to be our plans as we get prepared for the New York session today? Well, we are going to be following the technical expectations here. That is, whenever price action breaks out of a key structure, just like what we had here during the New York session yesterday, we expect that one point in time, price is likely going to come back, do a retest of structure, and the appearance of buy pressure above this level will definitely give us an opportunity to join another wave of bullish momentum to the upside. Now, with the whole situation we have here, we have seen sudden pressure, and as soon as price got to that area above the 1.24550 level, we have been witnessing some buy pressure in the last 4 hours. So will this turn out to be the reversal pattern we are looking forward to be part of the trend continuation to the upside? Well, that will be answered when we scale down to a much more lower time frame. But before I scale down into the lower time frame here, I want to call our attention and acknowledge the fact that price action is first of all right above a very strong demand zone at the 1.23600 level, which makes a whole lot of sense that we look out for buying opportunity. And secondly, since Friday last week, we have seen a situation here where price action had consistently found higher highs and higher lows in this market, hereby giving us a bullish trend line to support and guide our trading activity for today. And what this simply means here is that as long as price action remains above these trend lines, we feel comfortable in our buy position. So we have a trend line coupled with the key level at the 1.24550 area as a yardstick to continue to guide our bullish momentum for the week. Now let's get back into what we were talking about earlier before that digression, as we saw the reversal pattern here, and we said we want to be scaling down. Sorry, not a reversal pattern, a potential reversal pattern, as it is not yet confirmed to be a reversal pattern at this point. So we just saw buy pressure resume above this area, and we are thinking that this could turn out to be a reversal pattern. But things will be a little bit clearer when we scale down to a much more lower time frame. And in fact, on the 50 minutes time frame, I was able to identify a simple setup that we can use to guide our trading activity for today. And this was what I was able to come up with, and that is this whole structure here. Let me zoom in so that we can see things more clearly at this point. So this is what I was able to come up with here. So I acknowledge this bearish trend line, sorry, the lower highs here, to give me this trend line that you can see here. And then we have a key level for today that will be useful for us to confirm that this is a reversal pattern. You all know that whenever we have a reversal pattern like this, the next thing we want to be doing is to identify the neckline that will be serving as the platform upon which we want to be buying, and at the same time the neckline will be validating this reversal pattern if it is broken. So at this point in time, we want to see price action break out, retest the 1.24750 to give us that opportunity to be part of this potential move to the upside. And one thing about this whole structure is that as soon as price action breaks out of that neckline, it would have also broken out of that trend line, which will be a beautiful sign that the trend line could no longer hold on to that bullish pressure and then caved in to the buyers. So this will be what we are going to be looking at to buy the GBPUSD for today. So we could have a buy stop order above the 1.24750 level with a stop loss somewhere around that our key level, dovetailing to about 22 pips thereabout, which is not bad at all. Let's see how price action plays out from this current point. And you could also wait for a retest of structure if you are a very conscious trader. Wait for a retest of structure, retest of the trend line that was broken and the 1.24750, and the appearance of buy pressure in the lower time frame will give us that privilege to be part of the trend continuation to the upside. So these are the things we are going to be looking at on the GBPUSD to buy this pair for today. Now, with that being said here, in as much as we're looking out for buying opportunity, you all know how we do it here on the XAUUSD Live. We always ensure that we also keep tabs with the potentials of the opposite direction. The financial market, like I said, is always a very fluid market, and it is appropriate as traders that we remain as much flexible as possible so that we can be part of any potential move that the market is going to be presenting. So in this kind of scenario here, if we are going to be selling, what do we want to be seeing on this chart that will make us negate all our bullish expectations in this market? So in that regard, I will be scaling back into the 1 hour time frame so that we can see things more clearly at this point. And remember that we had a trend line earlier which was identified after we connected the series of higher lows here. And we said here that the trend line will be our guide, that as long as price action remains above the trend line, we shall feel comfortable in our buy position and look for more buying opportunity. But if at any point in time today price action breaks down both the key level and the trend line, then at this point there is a high chance that we could be having a momentum shift. But remember that we are not going to jump into conclusions at this point when price action breaks down that structure, as we still need some confirmation to happen around this area to give us that confidence that sellers have actually gathered enough strength to continue to the downside. So what we want to be seeing here, what we want to be doing is to scale down to our lower time frame. Then we look out for a retest of structure. It could be the retest of the 1.245, the retest of either of this trend line, but most importantly, we want to be seeing how buyers are finding it difficult to break back above that structure, which will reflect on the chart as a selling pressure below this level. Then we can join that move to the downside. Then we also have structures like the 1.24100 level, which happen to be our support line for the week. As soon as price gets into that structure, ensure you move your stop loss accordingly, lock in some profit, and depending on how price action reacts to the structure will determine if we are going to be adding more sell position to our existing trade, or we are going to be getting ready to buy the GBPUSD from this point. So a breakdown of the 1.2410 level, retest of structure will welcome selling opportunities as we ride the move into that demand zone we identified earlier, where if price breaks down that structure again, we had more position to our existing trade. However, if price action drops into the 1.24110 level and we begin to see buy pressure, it might be another opportunity to buy. Remember, this level has been a buying niche at one point at the beginning of the week. If we start seeing buy pressure here, it might be an opportunity to buy. And if we buy, as soon as price gets back into the 1.24550 level, which also shares a confluence with that trend line there, we move our stop loss, lock in some profit, and depending on how price action reacts to that structure will determine if we are going to be selling as a trend continuation or buying if a breakout retest of that level happens. So let's keep this in mind while we continue to monitor price action. I hope you mounted my screen or recorded this screen here so that you can use it as a reference point when you're about to make your individual decision. So that is that on the GBPUSD for today. If you have any questions, let me know right in the comment section. Now moving on, right now we move on to the XAUUSD, which was an instrument that we we bought yesterday after we identify Dino. I see your comment. You're welcome, Dino. I trust you are doing well, Dino. How are you doing today? All right, so what we saw here yesterday was quite interesting on the XAUUSD, and the fact that price action is sitting on a very strong demand zone at the 1970 1975 area was a sign to look out for buying opportunity in this market. And when price action started this week, we saw this whole situation where our price was caught within this flat channel between the 1985 and the 1977. And you all know what we look out for whenever price action is caught within this kind of channel. We want to see a breakout of structure for buying opportunity or a breakdown of the structure for selling opportunity. And with the look of things right there, and with our buy stop order above this structure here, we had our first buy position for the week on the XAUUSD, and we were lucky enough to be part of this move as price action moved about 160 pips in our favor before this bearish momentum began. And I hope you did move your stop loss accordingly to lock in some profit as price action moved in our favor. And if you did, you would have been taken out with at least some small profits at that point in time. And at this point, what is going to be our plans for today? What are we intending to do on the XAUUSD for today? So personally, we already have a trend line which we acknowledged yesterday, which is the bullish trend line you can see on your screen here after we connected a series of higher lows in this market. So this same trend line here is going to be our guide for today. So as long as price remain above that trend line, we look out for more buying opportunities in this market. So that is what we are going to be doing. So anywhere above the trend line and the 1985 will welcome some buy position. But if at any point in time the breakdown of that trend line happens, then we will be getting ready to sell, where a further breakdown of the 1975 will welcome more selling opportunities in this market. And I think I was able to identify a simple setup on the 50 minutes time frame, which I would love to share with you. And I think we can use this structure to guide our trading activity for today. And now this was what I was able to pull out from the 50 minutes time frame, and this is what we have here. It's a very simple setup where I acknowledge the fact that price action has been bearish since the early hours of today, and in order to acknowledge that, I connected a series of lower highs which gave me this bearish trend line you can see on your screen. Then we had this demand zone at the 1988 level, which has been a strong demand zone in the last 12 hours in this market, I guess 12-15 hours thereabout, and has been a very strong demand zone. And I was the opinion that if price action breaks out of the 1991, this demand zone has proven its validity in this market, then a breakout of that level will definitely have broken out of that trend line to give us a buying opportunity. But that did not happen here. So at this point, I had my obviously, as you can see, I already have my sell stop order triggered below the 1985, and I'm of the opinion that price action may continue to the downside from this point. And for those who have joined this bearish momentum, well done to you for being on standby to have got this move. And for those who are not yet in this trade, well, you don't need to worry, and there is no need to jump on a moving trend right now, as we need to be very patient. And how do we intend to join this if you had missed out on that opportunity? Well, I would advise you to remain patient, and since we already have a breakdown of a key structure like the 1985, which happens to be our resistant line at the beginning of the week. Remember, we had the resistant line broken here. So we had a breakdown of that resistant line right now. So what I'm advising you to do here is to hold on for a retest of structure to happen at one point in time before we want to be joining that move to the downside. So let's see how this plays out in the New York session today. So what you want to do here is to hold on for a retracement phase or a trend continuation pattern to be part of the bearish move. And please ensure that you have your sell position secured. For those who had already joined right now, ensure you secure your sell position. And remember that we are on a very critical line right now, which has been a strong demand zone in the past. So anything could happen. We could have a false breakdown. So it is very important that we move our stop loss accordingly, lock in some profit, and the more price action breaks further to the downside, the more confident we are in our sell position in this market. So back to the 1 hour time frame here. So that is the trend line. I want to show you the trend line here so that we have things clearer. So this is the trend line. So it's still very critical. Anything could still happen. Buyers could still come in from this area to push price to the upside. So we need to be very careful. Move your stop loss, lock in some profit, and the more price action drops below the trend line, further away from the trend line, the more comfortable we shall be in this market. And please note that there is still a tendency that price goes to come back, do a retest of structure to send price crashing further to the downside. And we are still, remember, we have the trend line here. Price goes to come into the trend line to retest that structure to incite a bearish move to the downside. So let's see how price action plays out from this point, and I will see you tomorrow as we review this market to see how well price has been doing so far. If you have any questions, let me know in the comment section. Sant Reed, how are you doing this morning? I see your comment. Trust you are doing well. Are you new with us? Let me know in the comment section if you are. Now moving on to the last pair for today, which is the USDJPY. And on the USDJPY, we have a very choppy situation going on right now in this market. I remember yesterday we identified this simple channel between the 134.480 and the 133.900 area, where we anticipate a breakout or breakdown of the channel for trading opportunity. Though we had a breakout happen after price action broke out of the 134.480, and indeed price moved about 30 pips in our favor before the sell pressure came in, and I did hope you moved your stop loss to lock in the position, probably at the worst case scenario at break even before we were taken out of that position. And right now we have price action continued in that same zone between the 134.480 and the 133.800. Now remember the importance of the 133.800, how it was serving as the neckline of the reversal pattern we identified on the daily time frame, and that level also is serving as our key level for the week. Now, for the sake of clarity and for those who are not part of our live session yesterday, let's quickly run through the daily time frame to see how important the 133.800 level is, so that you can be on the same page while we discuss on this whole structure on the lower time frame. So the first thing we acknowledge on the daily time frame was the fact that price action has been the 131.00 level has been a very strong buying niche in this market, and this has lasted about 10 to 11 months. And after the breakout of this trend line here, we saw how price action came back to retest the structure, and then price action transitioned into what looked like a reversal pattern. Now this is where the 133.800 level came in. You know, whenever we have identified a potential reversal pattern like this, the next thing we want to be doing is to acknowledge the neckline of that reversal pattern, where a breakout of the neckline will validate the reversal pattern, and at the same time that neckline area will serve as a platform for buying opportunity. And prior to last week's trading session, we anticipated that, and we were part of this 130 pips move in this market before the sell pressure began. And during the beginning of yesterday's trading session, we agreed that as long as price action continued to find buy pressure above the 133.800, we'll be looking out for more buying opportunities in this market. And not only if price action breaks down the 133.800, then we shall see this as a bearish signal that will negate the reversal pattern we identified earlier. So you can see how important the 133.800 level is at this current point in the market. So with this information we have gathered now, we can scale back down into the 1 hour time frame as things will now become more clearer while I explain further. So back to the 1 hour time frame, as you can see, and we already acknowledge the fact that price has been caught within a channel, and this is the 133.800 level which I shared with you on the daily time frame, which has been our neckline, and at the same time serving as the key level for the week. So as long as price action remains above the 133.800, we will look out for buying opportunity. And if a breakdown of that structure happens, we look out for selling opportunities in this market. And with the look of things right now, I'm going to delete this trend line as it is no longer needed here. With the look of things right now, you can see how this area has been a strong demand zone. At least since last week's trading session, it has been a strong demand zone. So is it advisable to buy at this point? Well, I won't be buying here yet. I want to see price action break above the 134.480 for me to look out for buying opportunity in this market. But if at any point in time we see this whole situation here where price action breaks out of the 134.170 level and then comes back to retest it and continued by pressure resumes above that level, then I will be looking forward to buying at that point. Then a buy stop order above the 134.480 will definitely be an opportunity to add more position. And then we have the 135.00 level where we could add more position if price action ever breaks out of that structure. So that is how we are going to be buying the USDJPY today. But if the contrary happens in this case and price action drops below that neckline and key level we identified at the 133.800, then at this point we will start considering selling this pair. Now remember, as soon as the breakdown of the 133.800 happens, we are not going to be getting too excited as we still need some confirmation to happen, which will reflect on the chart as a retracement where price comes back to test structure that was broken or the trend line. And most importantly, we look out for reversal patterns that will support the strength of the sellers at this point. Then we'll feel comfortable to join right below the 133.800 to join that move all the way to the downside. So this is what we shall be looking at to sell the USDJPY for today. So we are not selling unless the breakdown retest of the 133.800 happens. So these are my views on the USDJPY. I hope you screenshotted my screen, and if you did, you will be able to use it as a reference point when you're about to make your own individual decision on this pair. So, and it's on this note I want to call it a day here. It has been a wonderful moment, and I'm very sure that you are well equipped to be able to take advantage of any potential trading opportunity during the New York session today. So I hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these pairs that we are monitoring has been doing so far, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.